There's political chaos in France and it could affect the rest of the world. Let me explain to you. Easy for the Brits, we always blame the French, but so do the Germans too. French get it hard perhaps, everybody's blaming them. But political chaos right now means that there's nobody really able to control their government. What's happened is you've had the majority right-wing votes in the first part of the election, but left-wing majority in the second part of the election. Overall, the right-wing has actually lost to the left-wing. There's more left-wing than right-wing, but it's so spread. Can I tell you what's worse in France is that even within the left-wing party, they're split, and the right-wing party, they're split. So actually you've got a country that's run by people that are going to find it difficult to agree and difficult to actually make financial decisions. The market actually liked it at first. Why? Okay, well, the reason is simple. If France is not able to make significant changes, it means it won't come out of Europe, that's good for Europe. It won't be in a situation where it can do anything too dramatic, and they're worried about the right getting in and perhaps things being too dramatic. But instead of that, you've actually got a government that's not able to really take action. That has the immediate effect of government bond prices going up. What does it mean? It means it's more expensive for the French to borrow money than it is other countries. Why is it an issue? Well, it can affect the euro. Imagine there's all these different countries, and if France with debt is struggling to repay its debt, and other countries perhaps are growing, and France is stuck in its particular situation, then that actually affects the rest of Europe. Potentially the euro goes down, potentially you actually end up with even more volatility in French stock. So what should you do as an investor? Well, you can diversify away from the euro if you choose to do so. And of course, it could be that they sort the situation out and some sort of agreement comes. But you should always look to diversify, particularly in situations like this. If stock fall away, you may say, well, the stock's fallen away, but actually they're very good companies. You may still choose to invest. But right now, it's better, in my opinion, to diversify your investments. Look for diversification. In other words, investing internationally and in different industries that are growing. So there's various ones that you can look at, that you can see. Clean energy, for example. You can also see in tech, there's particular companies that are doing significantly well. There's trends that are very likely to continue. So invest into those areas, look at gold, look at commodities, and just make sure you've got sensible diversification. You can see in the French situation, it may not be the major issue now, but you can see a trend that this potentially causes problems in the future. Reality is bond prices go up. You saw it in the UK with Liz Truss, and it was difficult for the UK to borrow money. Ultimately, she lost her job. Why? Because she promised to spend lots of money, no sign of ever getting it back. Nobody wanted to invest in the UK. And all of a sudden, they had to change the Prime Minister. France, again, same situation. If everybody's worried about what they're doing, they don't want to invest in France. Makes it expensive for the French, makes it difficult for the government to actually function. And then you get another election. Crazy world, but that's where we're at right now.